Good turnaround Tuesday, everybody. How's everyone doing today? Bando, nice to meet you. Arif, Patrick, Zig, William. Who else is here today? So we do have Turnaround Tuesday happening today, guys. I have a couple ideas. I talked about it yesterday. Hello, Patrick, Neil. Nice full house today. Thank you, everyone who took advantage and invested in their future trading performance by subscribing to ForexAnalytix. Hi, Hardianto. How are you? George, Greg, everyone. So we lost a legend last night, Tom Petty. Who loved Tom Petty music? It was hard to be in a bad mood when you were listening to Tom Petty. I used to use one of his songs in many of my trading rooms. Anyone know the title of that song I used for Tom Petty? From Tom Petty. Yeah. David? The waiting is the hardest part. Oh, thank you, Sandeep. I'm glad you joined. All right, so the waiting is the hardest part, but it's Turnaround Tuesday. So I don't think we have to wait. I think there are some scalping opportunities. Loved Refugee too. But the overriding impact event this week is going to be the NFP, right? Everyone agree with me, NFP is going to be big. So possibly there's going to be some profit taking on long dollar positions going into it, since they have big leads. People have been long the dollar for the last 6-7 trading days. So I see an evening up at least into the NFP. Give me a why if you understand my rationale here. Okay, so let me move me. So Greg, yesterday I was talking about potential shorts in USD CAD. It could have ended today. So Greg has the same dilemma. Is it here? Do we stretch to the trend line, which comes in above 26? Today's high was 5.5. So what you do is you don't go in with both feet. You don't plunge into the pool. You put a toe in the pool, maybe a third, maybe a half. And then if you have a decent trade, maybe back to 4.5, 100 pips before the NFP, you take it. And then look for some type of recommit after the NFP. Give me a why if you're with me on that. So here's the way it looks. Also yesterday I was talking about the Aussie. I showed the weekly. So I think if Canada's going to turn, I think Aussie will too. I showed you the weekly breakout and we're there. So it needs to turn pretty soon. Grugga has lower targets, so again, I'd approach it the same way. You have a piece on. Grugga thinks we could go to 760. I have this breakout right there at 77.65, so it's possible. But you have some nice divergences developing here. You could almost call this a little 3 drive here. Here's 1, here's 2. Here's 3. So maybe we get a rally at least 870 or so. Of course, it's still lower on the week. And for it to reverse back to the upside, you could use this as a potential target. 2-week off number comes in at 79.70. So that'd be a big trade anyway. 79.70. And so these are a couple of my Turnaround Tuesday candidates. The other, of course, is $1. Maybe some profit taking here. We diverge pretty good here. Very nice divergence here. So why can't we pull back to 93 going into the NFP? 92.5. Maybe come back and check the breakout, or at least 93, just in case this is a 2 driver right here. Okay, so the Dixie's one of them. Steve's going to win a Coke for me. Steve's going to be short S&Ps at 25.35. I'm telling you, it'll probably work. He was patient, waiting for this. So if we get to 35, that's a potential turnaround Tuesday candidate. And I'll wrap it with US dollar yen, which I would approach the same way as everything else here. You know, it keeps trying. Luca had a 114 level. I don't know if we're going to get there, but to me, this looks like a two-drive formation. And remember, some of these ideas, most of my ideas I check out with the traffic light page. Some of them are just my thoughts. So don't let, so when they work, let that reflect well on the service. And when they don't let them reflect badly on the service. Everyone with me? So we can make another run towards 1350 in the end. But I consider this a potential turnaround target, especially if Steve's right and we're approaching the top in the S&Ps, that there could be some risk off, which means lower yen. Probably would have been more bearish if we'd already taken out this high. And so if the yen is going to turn back to the downside, and right now I'm just talking trades, we should be looking for something in gold that's overdone. Short term, I'm not talking about a big bull market in gold. Where are you, gold? Here. But we're starting to get some nice divergence here. Everyone see this? Non-confirmations. So all the way down this was a confirmed low, but now we're grinding. So why can't we get a rally back to 1288? Maybe we have some type of falling wedge here today. So this is my imitation of Steve Volge. I know it's not great, but this is it. Steve's a much better technical artist than me. So, you know, kind of cracking out of this wedge right here. I certainly wouldn't be short from down here. Be curious, Blake is back to see what Blake thinks as well.
Oh, I'm here.
Okay, so something like that. So yen top and a potential bear market rally in gold. So welcome back, buddy. Are you tired from your fun?
I am. I'm tired. It's one of those you know, when you're not sleeping in your own bed, and you know,
Yeah.
and I mean, I obviously had a lot of fun with my friends, so it's just I got home. Excuse me, got home kind of late last night, and so I'm just trying to get my head back in the game. But I've been looking at everything this morning, and just, you know, kind of looking at where the market's at, and what I'm most surprised with right now is how strong the dollar has been, but we're at pretty key key levels everywhere at this point.
Yeah, everywhere.
Yeah, so yeah, it is. And so, you know, I'm gonna take a real quick look over, and let me get over here really quick and just give you guys some of my observations. Okay, so like you can see the dollar index right now, I'm assuming.
Yes.
Okay, you know, so the dollar, we've rallied from this, you know, I call it a support zone that we've been out for a long time, and here's the big blue support zone. You know, we did the false breakout, and we've rallied back, and we've cleared a lot of you know, like, you know, trend lines. You can take out that trend line here. Let me remove this one really quick. We don't need that for now. I'm trying to clean up everything. We are approaching like some previous support, which is current resistance, which is around 94. I think the most surprising thing is right at this point is we're kind of boxed in here. If I can I'll grab a pen.
Yeah, maybe we put in the right shoulder here, Blake. You know, kind of maybe a little symmetry to the left, fill it out.
You mean come all the way back down here? Well, I don't.
Yeah.
I'm trying to figure out what's going to happen today. Okay. So, yeah. But there's no data. There's no data today that's going to really drive the market, I don't think. One thing that I'm going to pay attention to though is this this resistance here, right? Okay, which is at 94, and then you can see this trend line that comes through, this red trend line. We've broken it, so the support is going to be right here, and so we're kind of boxed in here a little bit with the dollar index, and I'm more curious to find out, are we going to continue to break higher, or does this end up being a false breakout? Because what has happened already, and this is a daily chart, so what you'll see here already is overnight we took out all the stops above this resistance, and I actually got a message from another trader last night saying this is really bullish on the dollar index. I'm not going to tell you what trader it is because some of you know who he is. I don't want to. I'm not going to tell you. I don't want to talk about anybody or anything. It's just one of those things.
We all know George Soros.
Okay, but I got a message, and I didn't see it until this morning. I got a message from this trader saying, "Oh, hey, look, the dollar looks really bullish here," and here it is following up in after Asian trade. Whenever you get these moves in Asia, they're always very suspect. You know what I mean? So last night, you've got the dollar index breaking higher. And think about this right here. You got the dollar index, and you can see it, breaking higher, squeezing everybody out. Everybody's bullish as all get out last night, and here we are in European trade, and we've almost put some false breakouts in play. Now, I don't know if they're false breakouts yet. I think we're going to have to, see what happens throughout the course of the session. But then you have to start taking a look at all the other dollar pairs and seeing, is it possible? Now, like I take it over to the euro dollar, and I'm like, okay, well, we have this, range extension, head and shoulder pattern, whatever you want to call it. It actually still has some distance to complete this range right here, right? So if this is the range extension, something like that looks like this, we still have some distance to travel. The flip side is you can see how divergent relative strength is. I mean, this is very divergent. I actually, you don't see it quite as divergent as you do right at this point. You can see how price moves lower, relative strength is not confirming, and then now here we are bouncing. So Zero Hedge posted something which was really interesting, and Chi in our chat room, noted it, and then that's when I looked and saw it. JP Morgan says the positioning is most short for JP Morgan clients treasuries that they've been since 2006. Now, the scary thing about that is if everybody's short treasuries, okay, so you're short treasuries, you're expecting the dollar to rally with yields. And I look at treasuries right now, and yes, they put in a false breakout. This is several weeks back. Yeah, we have this bearish flag pattern, but you notice what treasuries have done really over the course of the last week and a half, or a week. Actually, I should say week. We're consolidating, and we're not really breaking lower. Well, what if some of that positioning unwinds a little bit?
Looks like a 3 drive developing down there.
Well, I mean, is it possible that we get a bounce in treasuries here, and then if we do, yields may fall, and if yields fall, then next thing you know, we have a dollar that pulls back a little bit. But you're right, non-farm payroll, and going back to your comments earlier, Dale, non-farm payroll is this weekend, or this Friday. It's going to be, that's going to be the number, and that's what everybody's going to be watching for at the end of the week. The question is, will we get some of this dollar unwinding ahead of that? I think it is entirely possible, because I think the market is getting pretty aggressively long the dollar down here. You know, you had traders that had been short the dollar for a while, and you know they've probably covered, and you've got some people trading counter trend, which it makes sense, and the dollar's had a nice move. The question is it going to be able to continue to benefit from that? And I'm not sure over the course of the next couple of days. And I look, you look around, you got the pound dollar is approaching trendline support. The pound has become, quite weak over the course of the last couple of days, or over the last week since we failed at the multi-year trend line. We're approaching a 50% retracement here. You got the Aussie that may have put in a false breakdown. You got the Kiwi that hasn't hit a new trend low. You got the Swissy that might have posted a false breakout to the upside. You've got the Canadian, which is still in an upward sloping channel, but it's challenging a 618 retracement. You got the Norwegian krona that's popping into resistance that might have put in a false breakout. You got the US dollar Swedish krona, who also has seen some upside here, and we're knocking our head up against resistance as well. And then you got the peso that's kind of stalled. It's had a nice rally over the course, well, since last week, and it's just kind of stalling here. So there are indications that the dollar, you got to be a little careful here after this big of a rally. It's like, do we continue? And that's why I think we're a little boxed in right here. I think this is really this is going to tell us where we're going, is when we come out of this little box here, whether we push back below and do a little false breakout on the dollar index, or if we actually break through 94. I tell you, if I was long the dollar, and knowing the 94 cent or 94 cent level here on the dollar index was, we're coming right back up on it. This is a breakdown point, and it's been very significant in the past. I would be a little, I would be trying to be proactive here, probably taking some profits, that type of thing, if that makes sense. And are you there, Dale?
Yeah,
okay. Just making sure. Okay, just making sure.
Yeah.
Now, you'd also pointed out a few other things that I'd like to discuss. Is you were looking at gold just before I started speaking here, and gold, you're right. It's come down, and you said, well, maybe it can hit 1288 again. Like, why couldn't it? I mean, we're at a 618 or close to a 618. We got a lot of support through here. The one thing that scares me about gold, though, is gold. I mean, we did a little false breakout above this 1300. We've come back down, but we're getting down to levels where traders may find it attractive again. Maybe between here and 1240. So I think if, in order for us to get all the way down here to 1240, that's probably going to be a post non-farm payroll type of thing if we're going to make it all the way down there. But you're right, gold is gold's been beat up the last couple of weeks, and we may be in an area where you might see some buying, which again, you get some buying in gold, that's probably going to give you a little bit of dollar weakness. So there's gold, and then the S&P, I think you're right, we're 5 points away from 161% extension. If you look at relative strength on the S&P, we are divergent, okay, as we peaked relative strength over here back in March of this year.
6 months of diverging.
6 months of diverging, but now relative strength is pretty overbought. And then if you go to a 4 hour, obviously we're overbought on relative strength as well. So I think if you want to take a shot at the stock market on the short side, 25.35 is probably the place to do it, and you don't have to risk a whole lot. You might only risk a few points. you know, risking a few points to make 20 or 30. That's my kind of trading. I'd like to see if we can make it up there today, and I might actually short a little S&P as well. I've had a NASDAQ short on for the last couple of months, just a personal one, and the NASDAQ's kind of struggled. You can see the NASDAQ's, you know, I've played in and out of it a little bit, but I keep a net short position myself. But you know, the S&P, it's been rallying, and we're getting up to probably some pretty key resistance up here, or at least some near-term resistance. But the index you got to watch is the Russell. I mean, look at the Russell. The Russell's been non-stop. I mean, this has been an absolute, you know, monster market, and you got the, you know, the Russell 2000. Now it looks overbought on so many different indicators. I wouldn't be surprised if the Russell and the S&P, you know, peak. And now, is it going to be today? It is turnaround Tuesday. I would wait to see what happens at the open, but I think it's worth watching. We don't, as currency traders, we don't know how the dollar is going to respond to risk off. I think that's been a big unknown as of late. But you know, the dollar yen is one of those that could respond. Maybe not so much the dollar, but the yen. And one of the things that I did note today that I think you guys should pay attention to is the dollar yen is kind of like the NASDAQ. You know, the dollar yen is not breaking higher. You know, not like the S&P, not like the Russell. You know, the NASDAQ, you know, we could set up for a double top up here, you know, at this 113.25, especially if we come back and test the lower 112 levels. So
or one more high, marginal new high without follow through would also be okay.
We could, yeah, we could, and so that's why I think you got to pay, you know, if you're going to be trading like a correlation, I think you pay a little attention to the dollar yen and see how, you know, how it responds to equity market strength. And if we do get a bit of a reversal, how does it react here? I mean, I'm looking around at all the other yen pairs too. I mean, the euro yen's had a nice bounce, and you know, the pound yen is trying to develop like the head and shoulder pattern. I mean, the Aussie yen's on support. I mean, the Aussie yen, this could actually crack lower here. New Zealand yen has been very unresponsive as of late. The Canadian yen, it's come down to the 90 level, and you know, I guess it's kind of responded the way we expected here, but I actually was thinking that we might get a little bit more towards 89.25, and that still could come, but you're going to have to see a little bit of stock market weakness in order for that to happen.
So perhaps yen crosses are foreshadowing index weakness, and they're leading the way.
Well, I don't know if they're leading the way, but
well, they're not making new highs.
They're not making new highs. They are
so
underperforming.
To me that's like, you know, they're the first to show weakness.
Yeah, and I do believe that if the stock market actually does show some weakness, I think they're going to be the ones that you can really benefit on being on the short side of some of these if the market does, you know, roll over a bit. So I think that we can, you know, pay pretty close attention to as well. And again, I'm not sure if we're going to get stock market weakness. I'm not saying that at all. But what I am thinking is you know, I think there's some opportunity here. Now I'm going to stop short because I know Nick has she's popping into the webinar, and she has some things that she wanted to say.
Hello.
Hey, Nick.
Wow, it's like the lucky day when Nick shows up.
Hello.
Good morning or good afternoon.
Oh,
I'm doing great. What's going on?
Chair is squeaking for you, Nick.
huh?
You need some WD-40 there, Dale. Chair.
Next payday, buddy.
So Nick, what's happening? What are you seeing out there?
Yeah, not much. That that me. I thought for me, all of the US dollar pairs except the euro, but particularly the pound, were on really good support last night when I went to bed, and I found you wake up and you see all that support's gone in a lot of them. It hadn't quite got there in the dollar index and the euro dollar, but I'm looking at a lot of them at like a false break, and I'm really interested to see how we close today in the dollar and the dollar index and a lot of these dollar pairs.
So can you illustrate, because I'm kind of seeing the same thing. Do you have a couple of charts that you can show us?
Yeah, I do.
Let me
just getting everything ready.
I'll flip it over to you.
And then I got something in the NASDAQ too.
Oh, the NASDAQ. Now that's interesting. See, the NASDAQ. I mean, it's really been underperforming the rest of the market. So, I mean, I'm interested to see what you've got there. But I did give you the controls, by the way.
What can you see on my monitor?
I cannot see anything yet.
Not yet.
Now I can see your pound chart.
Okay. Good. Okay, so this is the pound. If I go to the daily pound, if I do the 23.6 fib from the crash low at 118.60 in 2016 and to the high that we just made, the 23.6 fib retracement that we were sitting on yesterday, we broke overnight. That was at 132.64. And it's also the 23.6 fib if I do it the other way up. So this was really important support if the pound is going to keep trending higher and not correct in the channel that I sort of see it in. So now we've broken it. Now I think that we go lower to the 38.2 next. And so unless it's just a false break and, we've done it overnight, which you can see, now I could see it going up and ending up as a bullish hammer, but otherwise I think we go to 130.20, which is the 38.2 retrace of the entire rally. So that was the level that I was really looking at to hold, and it was these prior highs as well from August, and so there was a lot of support there for the pound. And it was a big deal fib retest level for me in the Aussie as well. It was the prior lows and the back test of a 23.6 fib, and also a test of the 23.6 fib of the entire rally in the Aussie as well. So that means from this low to this high, we've broken the 23.6 and the low from August. And we were also back testing a monthly 23.6, if I put this on, or weekly. And that means from this high in 2011 to the low in 2016. So for me, it was a big deal level, and, weekly 20 moving average, a whole bunch of stuff. Why this was really important support.
So a lot of these, Nick, look like they're
a lot of these, and then if I go to the Kiwi, we had an ABC correction. I was bullish the Kiwi. I really liked the price action at an ABCD measured move, and that's failed as well. So that also to me bearish, okay, bullish dollar, bearish. But then when I look at the euro, this level that we were looking at in the euro comes from this prior high that we've got in August 2015, but we haven't quite reached the 23.6 fib in the euro, and in the dollar index we hadn't quite reached that level either. So for them, I felt like, we still have more room to go. Which one is going to work? Is the euro and the dollar going to turn early, or maybe they're not all going to do the same thing for once? That would be cool, wouldn't it? But as you can see, it looks pretty bearish, and certainly the pound does. So in the Canadian dollar, which for me is quite a canary, excuse me, here we go, trying to get it up, sorry. In the Canadian, it was these prior lows and the 23.6 of the entire decline from May. So that was the level I'm looking at. Now I think that we move this and we look at the 23.6 fib now of the entire decline. We view it as one sort of big move. So I'm looking a little bit higher now. Let's move that up here. So 126.78 is the next level I'd be looking for to hold for the Canadian. So yeah, that was why it was a little bit confusing, and that's why I thought, oh, I thought the dollar really could stick its toe in, and so today's close would be really interesting for me. Because we're having a good old look below. I think everybody could see these big levels because they were big support and resistance levels too. So we're going to run some stops and then we'll see how we end the day or end the week, because, very often big levels weekly, you see weekly close back above and a false break, and that'll give you a really powerful move, a false break. So it was looking a bit like a false break in the euro because the euro looks so well supported now, but
At least the euro has a tail.
oh, high. Exactly.
Right. I mean, everything, like I was pointing out that last night, I mean, because I was looking at it today, I wasn't focused on the markets last night. I was just looking at it today. But last night in Asia, the dollar looked really strong, and
Yeah.
and so here we are, in European US trade, and the dollar has, looks like it's backing off a little bit. And that's why I'm a little hesitant about, okay, did the dollar peak here? You know what I mean?
Yeah.
So, but I know I know you were gonna point out the Nasdaq.
Okay, there's a Nasdaq monthly chart. I just cleaned up my chart here. So I like, this is a monthly chart. This was the high in 2000 to the low in 2002. And I really like to look at fib extensions. So project from corrective swings. That means from this high. Sorry if I can get it to. My tool is not working. Excuse me. Here we go. So from this high to this low, we are at the 127 fib extension here. I'll make it a little darker so you can see, and put it on the. So yeah, we're at 5995 is the 1272 fib extension of the entire techbeam.com crash, and this is why I think we've stalled here, and this is why I think the Nasdaq is underperforming. So you can see this level on the daily chart. We've gone sideways at it a couple of times, bounced off it. So for me, this is really interesting because if we keep going, obviously, then we're going to look for the 1.618 next, and it'll give us a really good target. And every other one of those fib levels on the way up, it's had a really good reaction. So I think that we can read a lot from this. So I wouldn't be surprised if we don't actually go much higher than here, and I don't expect a monthly close above 5995 this month. But if we get one, then say hello to 7,000. That's what I was going to say. Yeah.
So Nick, it looked to me like most of the currency harmonics and fib numbers that you showed, that a lot of these pairs are either could become real good from here or failing here, and we won't know.
Yeah, really.
We won't know till the end of the day, at least, right?
Right, and I think probably maybe after non-farm payroll this week,
Right.
I think we could see weekly saves in some of these candles, and I think that the price action says a lot of people don't know which way next, to be honest. So that's how I'm seeing it.
So best to do.
I think some quite nasty moves. Yeah, some quite nasty moves in the euro. The euro Swiss really tempted people yesterday. Thought it was going to roll over, and the Swiss National Bank are back busy buying it all up again. The euro pound is interesting again to me because that has held a pivot level, and I find the euro pound on quite important support, and I think that could rally today as well. Sorry, this software really makes my computer slow down. Sorry. Just gonna
Did you like Tom Petty?
Sorry?
Did you like Tom Petty's music?
Yeah, that was really sad about Tom Petty.
Yeah.
I did. So I'll just try and load this page again.
See, his song applies all the time. The waiting is the hardest part.
The waiting is the hardest part. So last time I was on, I talked about why it was important. I do agree with Blake about the dollar yen. Is really back, still hovering around that really important pivot level. So we'll see what happens there. I'm sure you see. Look, yeah. I don't know what it is with this software. I apologize. Perhaps you better give it back to you. It's not working for me. I'm really sorry.
No,
yeah,
there
I
you
need
go.
to chuck some more memory in here or something, I think. Okay.
Yeah.
So this is what I like to see happen at a 23.6 fib. This is the rally in the euro pound from July 2015. You know, this whole rally, iffy double top or at least a high. We pulled back to the 23.6 fib. That was 87. 47, and this is a textbook test and then a rally. So for me, what's going to tell me that we're going to keep going, if I put a 23.6 fib on from this high to low, then above that says
getting through 89,
and we're right there right now. So
okay,
how we close, if we do this, then we keep going higher, and the trend is still up in euro pound. So I'm watching that one.
Yeah, nice look.
So
I don't know. To me, you know, I know I'm looking too far into the future, but I see two drives up there, and the last one didn't confirm. And I don't know. It looks like we could get
definitely. You know, but
another blow off. You know,
tops can take time, can't they? So we could go back up there, double top, mess around. Until we break this, though, we haven't really rolled over for me. So that's what I'm looking at.
Great point. Markets top with violence and bottom in silence.
Do they? Unless it's crypto, and then there's usually blood in the street. So.
Hey Nick, so speaking of crypto, what are you seeing over on Bitcoin? And I had to step away from the mic for just a couple minutes. So.
Do you know the trend is that the Bitcoin has been outperforming a lot of the other coins, and in a really not an overlapping rally, but a really kind of grinding, slow progress rally. I see it in a correction still. I'm not quite at the. I was looking, you know, for a little bit higher, maybe 45.50, 46.60.
Yeah.
But I would not be surprised if we took a leg lower from here.
Really?
And what was interesting, you know, in this rally in Bitcoin is a lot of the other big coins weren't following along. So Litecoin couldn't make it to new highs. Ethereum couldn't follow it to new highs. Dash was going the other way. So like it wasn't a proper risk on risk thing in the crypto space. It was more a kind of just Bitcoin really. And because the other ones didn't follow through, and because it was really grindy, nobody kept trusting it, and people kept trying to short it. I think that was the biggest problem. So I would not be surprised now if Bitcoin runs out of a bit of a steam and takes a dip lower. It used to be that when Bitcoin had a bit of a dip, a lot of the other altcoins would outperform quite well. Lately, though, the space has all been kind of moving together. So
that's interesting.
We'll see what happens.
That is really interesting. Hey, you know, really quick, and I don't know if you, I know you took a look at the NASDAQ. Like I said, I had to step away. I had to step away for a bit. Do you ever look at the Russell?
No, hardly ever. What's the ticker? I haven't looked at it.
Well, RUT is the one.
No, I haven't been analyzing it. I haven't been to.
Oh, you haven't?
Not closely, no.
Oh,
Sorry.
okay. It's just been on fire. So that's like.
Oh yeah, this is what's been crazy. I have noticed it in that respect, but have I drawn up the levels for the Russell? No, but I've definitely noted the outperformance. One of the reasons I'm looking at the NASDAQ so closely is it's really correlated with Bitcoin. Really correlated with Bitcoin, the NASDAQ.
Isn't that interesting? I wonder why that is.
Like intraday, it correlated with Bitcoin. So.
And are you still seeing that?
Yeah.
Wow.
For sure. So.
Wow, that's kind of cool. There's kind of
well,
cool.
not good if you want to hedge in something that's not kind of related, but yeah, it is definitely.
Right. Well, cool. What else? Anything else that you have on your radar there?
Not really, no. Today I find it was a little bit tricky. Like I said, everything's at kind of a pivot point. I thought gold might hold some support and have a bit of a bounce here. It's broken it, but silver's held on to the fib support that I was looking at. So again, that's really tricky when one goes one way, one goes the other way. So I was looking at gold to hold on to 50% support. Silver, though, this is a daily silver's holding on to this 38.2 level quite nicely, and those previous lows from August. So I see potential for a bounce here in silver if the dollar makes a turn.
Yeah.
Weaker, but if it doesn't, then it'll keep going.
Right, right, and it's. I mean, I look at the precious metals, and I'm really not even sure what to do with that space. But I'm kind of in the same camp that if they're going to bounce, they could bounce around here. I don't see why they can't. But you're right, it is kind of tricky. Now you said one thing as I was stepping back in. Oh, go ahead.
Oil as well, you know, with the dollar, everything on this 23.6. Oil's done the same, pullback and just broken 23.6. So Brent did it first. Then the WTI continuous. Now the November crude oil's done the same, broken the 23.6 fib. So more corrections, I think, for oil.
Really?
Yeah.
And well, it's. Did you see the multi-year trend line in crude that it hit? I mean, it hit a big like multi-year trend line, which alerted me like last week, and I was going to blog about it. I just ran out of time.
Yeah.
But yeah, it's if you take the highs from 2015 and just drop them on down, it just across the top there.
Yeah, I can see it. Yeah, no, I had a big ABC measured move. There was a lot of confluence here. So, but you never know. Is it a pullback or are we just bouncing off it and then we're going to carry on higher, or are we going to continue lower? For me, that sort of 23.6 fib that we're just testing now, you can see it. This is the key 50.29. So I think if we close the day back below 50, we'll see a much bigger correction to come. So, and we will have made an ABC correction higher. So not an impulsive turn for me yet in crude oil.
Okay, but something that it could correct maybe even a little bit further.
Definitely, yeah. And I think that, to be honest, for me, there's still room for one more leg higher, sort of 53.30. So. And still be an ABC. So I wouldn't be surprised if we turned here, made one more push higher, and then one more new high around the mid 53s.
Got it. Okay. Well, Nick, thanks for all of your looks today. Really appreciate it. And I think Stelios is here to talk a little bit about about the pound. I'm sure.
Mr. Macro.
Maybe a little bit of macro, but I can take the screen. I don't know. Stelios, are you here?
I am here. Yes. Hello,
hey,
everybody.
man. I've got the screen, but I wasn't sure if you had you had some things that you wanted to say about the market. And Nick, thanks again for all your input today.
No, thank you.
Yeah.
See you, Nick.
I can talk a bit. I could show some charts as well, but I mean, it's not whatever you guys prefer. Hold on, let me try and take the screen then. Hold on, change presenter. Anyway, here we go. I think I got it.
Cool.
Okay, so as always, my favorite chart to look at the moment for months now has been the Dixie. I drew some lines, I don't know, 2-3 months ago. We did discuss it on the webinar. We thought the dollar is going to bounce a little bit. There was a good chance. It is bouncing. I personally think it's probably going to go a little bit further towards something like 95, 96, and that was always the view I had. Obviously, there was always a chance it might go lower straight away, right down this support zone, and it's a pretty big support zone as it's turned out.
Yes.
But I do think it's probably going to keep going a little bit more into year end. I don't know how much longer, how fast it's going to go, but I think it will strengthen a little bit. And then I see the Fed basically, I think they're going to stop hiking earlier than the market expects. They are talking about continuing to hike and they're all hawkish and everything. But I think we've already seen signs where their hiking is putting the brakes a little bit on the economy. It's not, it's not grinding to a halt, but we saw in 2016 some very, very good numbers. Employment, growth, everything's going well. Inflation is still not there yet, and they keep hiking into it. So I personally think we're going to see a little bit more of a grind, and at some point they're going to stop, and that's going to be before earlier than the market expects. That's my opinion. That's why I see going back down below the zone and into the mid 80s or 80. There's a fib down there. The 50% is about 87. So that's my view. And then basically from this, then you can, there's a lot of things obviously that depend on the dollar. It moves a lot of markets. So you got my view on silver, you got my view on other pairs. So starting from this, we can have a look at other stuff as well.
So Stel, your view is kind of counterintuitive to the way most traders think. They would think higher rates, higher yields, stronger dollar. And what you're saying is the economy's not that strong, and tightening isn't going to help the cause, and that's going to create pressure to the downside on the dollar.
Well, yeah, tightening usually puts the brakes on the economy, right? It's the way.
Yeah.
It's the way for
everyone for years said interest rate differentials.
Yes.
It's a different narrative.
Yes, it's implied interest rate differential. So the market's implying certain path from now. If that path doesn't get realized, then obviously the market's going to move. So it's hiking in any economy puts the brakes on because it gives incentive to people to save. So I think that, as I said before, the U.S. economy is going to slow down a little bit, and then with inflation still not at target, they're going to have to stop. Because this is their mandate. Their mandate is not the stock market or the housing.
I can't wait to get 1.25% on my money market account.
Yeah. So
really looking forward to that.
That's a huge pay boost. So that's what I see. So that goes along with my view on, say, the cable, which we've talked about this before. I always said if it gets around 128 and a half, I think it is the level, which I think coincides with the Dixie at around 95, 96. So if it gets there, that's going to be one of my longs. I want to go long pound against the dollar, but not just yet. Now, as you said, as Blake said, I have a view on the pound, obviously. So Euro pound is one of, no, this is Bitcoin. Have a look. The Euro pound is one which I had the trade on as our subscribers will know, and people who follow this webinar. I was short from around 91, closed it just below 0.88, and now because I always thought there was a good chance of a bounce into that zone again. So around 89 or 90. Anywhere above 89, I'm going to be looking to initiate shorts again with the same targets, 80, 83, 84 down here, and maybe even below. I still think that the UK is pricing a lot of risk already into what might happen. Of course, there is uncertainty. We've said this a million times, but I do think even with these PMIs, which came out a little bit weaker than expected, I still think the question we need to ask ourselves is the UK economy in such a bad state that it really needs zero or near zero interest rates and QE and everything? My answer is no. Inflation is nearly 3%. Unemployment is doing very well. Okay, the market is not running on all, the economy is not firing on all cylinders. Otherwise, they'd be hiking already. But I think the reversal of the August cut should be done, and the recent change in the rhetoric within the MPC is slowly showing that they are like an old dinosaur. They move very slowly, but I do feel like there is a change within the MPC. So that's why I'm bullish the pound still.
So and since we're speaking about the Euro pound, Stelios,
yes.
and I didn't catch the news over the weekend about what happened. Can you explain to me, because I was gone, what happened in Catalonia over the weekend?
Yeah, I mean,
and how that affects like the future of the euro per se.
Yes. Well, the Catalans basically, they decided that they're going to have a referendum on whether to leave Spain or not. It's not leaving the euro; it's leaving Spain, as somebody very correctly said.
Right.
But so separating themselves as a separate, entity, separate country. Now, the Spanish Constitution, I'm not an expert by any means, but I know this, that the Spanish Constitution says that this is illegal. It's not allowed. So they decided we're going to have a referendum, and the Spanish government said, it's not legal. We're not going to let you do it. But what did they do? In my opinion, very badly is that they used violence against people. You know, instead of just saying, just like Rajoy said that after the referendum, he said, "Oh, nothing took place here. There's nothing legal that took place here, so forget about it." He could have just said that without the violence anyway. So what we saw is this whole thing.
A lot of people got votes and they got the result they wanted anyhow. So violence didn't help in any way. It just helped to make the issue more public. You know, to gain a lot of traction, etc., etc., etc. So honestly, I don't also understand what was the point. I mean. I think it only worked against them.
Yeah, and you know, so it's something that really should have made no difference, zero difference. But the way it was handled, it's made it very public, and it's also brought people supporting the Catalans now who otherwise would have had no interest in this. So so what does it mean for the euro? Well. Theoretically, it should mean nothing, because really this was something that was not allowed to be done anyway. So it's like, you know, me and Steve going together saying we're going to separate from Greece. You know, who cares? But
right.
I know it's a bad example, but you know what I mean. So in theory, it should have no effect. But the way it was handled, all this tension now and all that, it just doesn't look good. It doesn't look good at all. And it makes me very worried about, you know, this was one thing. What's the next thing that's going to happen? You know, and every time there's more tension and more violence in this, it just scares me a lot. So I already was bearish a euro in the medium term, because I still think there are big structural problems within the eurozone. But now things like that just make me even more worried about it. So to answer your question, short term, do I think it should do anything to the euro? Well, it's you know, caused it to drop maybe 0.5% or 1% or something like that. So it's not massive, but in the long run, I am still very worried about Europe as a whole.
That's interesting. Yeah. Okay. All right. So and really, it's like the near term. The near term effect is basically zero and nil.
Yeah, as you've seen, Blake. Anyhow, the market keeps ignoring anything that cannot cause some kind of a result that is, you know, immediate or imminent or whatever. I mean, the market ignores even much worse stuff than this. And yeah, I think the complacency that we see in the stock markets has also invaded, in some sense, the currency markets as well. You know what I mean?
Right. Right. Well, and by the way, good morning, Steve. How are you?
I'm good, mate. I'm good. Good morning, and welcome back.
Thank you. Thank you. Thanks for covering me the last couple of days. I really appreciate it. And my liver thanks you too. So.
In a good or in a bad way?
In a bad way. What happens when a bunch of middle-aged men get together to watch football all weekend is what happens. That's
well, Blake, I heard that, you know, I heard that
of your health, I should decline from what you're telling me.
Yes, you should. Well, and what
you know, it's been said that middle-aged men, when they go to a bar, the first thing they ask for is the menu, not the drinks, right?
Yeah, no, that didn't happen.
Well, see, you're young at heart, buddy.
Yeah, that's right. That's right. So, Stelios, what other macro changes have you seen, or anything that could be that's really moving against, like, grain, if you will, of what you're seeing with price action? Because that's really what it boils down to. It's okay, like, you have a strong macro viewpoint of, like, let's say, you know, like expecting the pound to go higher, but we've seen over the last week and a half the pound has come off after having a really nice rally. What other, like, divergences out there do you see that really stick out?
Yeah, well, the other one, which I know people who follow me will know, I look at the same things pretty much. I don't look at 35 different instruments, but the other currency which I like and I always play on the long side is Norway. And in particular, I usually short Euro Norway, but also dollar Norway as well. So you know, it's another currency which is taking a bit of a hit in the past couple of weeks as the dollar is strengthening, as the oil drops. So it's now at a very big level against dollar. I mean, I think we've talked about this. It's around the
up
8
yeah.
level. Yeah. So
And I was going to say with the U.S. dollar and Norwegian krona, I mean, this is one of those situations. I was looking at it very carefully this morning, thinking, well, we probably just brushed a bunch of stops, just at these prices, and you can clearly show us there that we're in a resistance zone.
Yeah. And this is these lines, this is a weekly chart. I drew these lines about 1.5 months ago. And when it was down here, I thought, it's going to tag the moving average and come back and then do that. And it's going almost exactly there. So I'm still looking at it. The only problem I have is that I still think that dollar, like I said before, is going to strengthen a little bit more. So, it could actually go a little bit higher, break the zone like a false break, and then come down. So if I see it going towards, initially I wanted to short 8. Now I'm not doing that. I think that if it gets around 8.10 or somewhere there, 8.15, and it looks like it's turning, I'm gonna short it, because I really, really like being long Norway. The problem we have with Norway is that the central bank goes in and usually buys Euro Norway when it gets to certain levels. Like at the moment, they're buying anywhere between 9 and 9.10, and it's currently at 9.40. So I like shorting around 9.40 and buying back around 9.10. I've done it many times in the last 3 years. So that's another currency which I really, really like, but it's going against what I think is going to happen for the past few weeks for whatever reason, and dollar strengthening and all that. So that's another one I'm keeping my eye on.
Okay, yeah, I was going to say, it's probably more of a function of just the dollar recovering a little bit after being completely beat up for the first, 8-9 months of the year. I mean, it's bound to catch a little bit of a bid, and which that is what we've seen in the dollar.
Of course.
Yeah. So I hear Steve is back a little bit. Steve, what are you seeing out there, and maybe you catch me up on some of these cross rates. I mean, anything that's been really sticking out like a sore thumb over the course of the last couple of days.
Let me grab the screen. Okay, what kind of cross rates are we talking about? Are we talking?
Well, I don't know. I mean, like I've looked at, I see some of the pound crosses have come off pretty good.
Yeah, actually they have. And now that you mention it, I think that both, at least the pound Aussie and pound Kiwi, both of them are quite interesting. They're also showing some divergence, because on pound Kiwi, I still see a very nice triangle here, and it looks quite good. On the other hand, on the pound Aussie, especially if we go down to the 4-hour chart, we have had a very, very nice break from an ascending wedge. So, that makes me feel that the pound Aussie, has quite a lot more downside left. I remain constructive, because even if we zoom out, we can clearly see that the moves were impulsive, but the pound Kiwi looks a little bit better at the moment. I remain constructive in the medium term, but I really believe that most likely than not, we have a little bit more downside left before we can actually go higher. This is now a 4-hour chart, and if we have a look at pound Kiwi here, we can see that it looks quite a lot better, because this is simply a triangle. So most likely than not, I'm expecting the triangle to hold, and at some point to move again towards the resistance and break to new highs. What has been interesting, and I've actually taken a trade since last week. We talked about it a couple of times on the in the chat room as well, is some of the exotic currencies, USD ZAR, for example. We had been monitoring this for a long time because of this very beautiful triangle.
Right.
It did me the favor. I didn't want to go long just when it broke, because I also had this horizontal resistance. And it did me the favor here on Friday to just plunge back into the zone that I had an order and barely got me triggered in. So now it looks good. I mean, it's already up in 2.5 days, I think I'm 2.3% up, and this is the beautiful thing with this kind of currencies, that when they move, you know what I mean?
Yeah, right.
Yeah, but if you see, there are more imminent breaks. For example, today the US dollar tested this prolonged channel against the Singaporean dollar. The first reaction is a rejection, as you see, but it still looks likely to, you know, perhaps do something like this and then break higher. The USD against the Turkish lira, also after testing this confluence, is rebounding nicely higher. As people, I think we've talked about it in the past, the dollar is still rebounding, is putting on a very healthy rebound. It started against the Chinese yuan. It started with this inverted head and shoulders formation. I'm still looking for, you know, this confluence of the 50% fib and this horizontal support resistance area. So I think there might be a little bit more upside here. So I see a lot of signs of dollar strength, and you know, I still see a lot of people willing to fade this. And you know, despite having my doubts as well, at least until we clear above this zone up here, I have taken the decision to, you know, to keep my dollar long positions. I'm now long against the Aussie, against the Kiwi, against the Euro, against the ZAR, and my only short dollar position as a hedge, which is out of the money, of course, is the cable. I had 50% position, and I added yesterday when we were exactly on the zone another 50. So now it's a full position. So this is the only short dollar position I have against the pound, and you know, I'm going to stick with them. I mean, I do see that this move lower in the Euro USD, for example, does not look impulsive for the time being. I do see that the Aussie and the Kiwi are crawling lower, but on the other hand, it's not like they've put any major accelerations. But I'm going to stick with it because, you know, they keep moving in my direction. So slowly, but they keep moving in my direction. So I think that I remain biased in the short term to be long the dollar. And if I see some big reversals, or if I start getting worried, what I'm going to do is that I'm also going to keep adding some other currencies being long against the dollar. For example, Stelios talked about the Norwegian krona, and I even issued an update yesterday about it. For example, the NOK, the USD NOK, is currently testing this major zone, the 8 zone. So, for example, if I start getting worried a little bit, what I might do is I might add more short dollar positions, like, for example, the NOK, etc., etc., etc. So, in essence, I might end up transforming my long dollar positions to some cross currency, to some synthetic trade positions that don't have the dollar in.
Right.
Because, yeah, so, you know, I'm sticking with it for the time being. Let's see what happens towards the NFPs. I'm guessing that we're not going to see too much. I think the market is going to wait for the print. I don't know if you have some other kind of view, Blake, but usually, you know, we go like with half engines to these kind of events. I mean,
yeah, no, I totally agree with that. Especially, you know, after the bounce the dollar's had over the course of the last week and a half, I would imagine that there's a little bit of dollar profit taking ahead of the NFP. So I would be a little, you know, if I was long the dollar right now, I would be, you know, cautious at this point. I don't know if I'd be establishing any new dollar longs ahead of Friday. At this,
no, I agree with you. I'm definitely not looking to add any more positions.
Right.
Sure.
And yeah, and if you're looking to hedge, I mean, this is probably, you know, one of the better places you're going to be able to do it. But it's still early in the week. You know, it's only Tuesday, so you know, there's still plenty of time. You know, going into, you know, the remainder of this
That
week.
is true.
Yeah. So
Although, for
yeah.
example, yesterday we had early movement and then a very boring market. We might get the same thing again. I mean, we have few pairs moving and a lot of them doing, almost nothing. On the other hand, the grind is resuming higher in all stock indices, etc. You already had a look at them. I really think that we're getting to the point, DAX also the same, to the point that we should get some type of pullbacks. As you very well said, the IWM has gone completely parabolic. I mean, completely parabolic. So I really think that this insane amount of complacency. Just look at the VIX. The VIX is now at 9.3.
Yeah, it's crazy.
Yeah, it is. It is. And if you see the long-term chart of the VIX, look at this. This is, I mean, it's slowly grinding lower. So like, even the moving averages are like slowly grinding lower. And, these kind of conditions, even if we see pre-financial crisis, these kind of conditions are never meant to last like forever.
Yeah.
It feels like that, but they're not. They're not. And all this complacency is going to blow up spectacularly when something actually happens that will trigger, some kind of real fear about the market. Until then, somebody has to play along with the music, right? Or at least not participate.
No, that's true. Very true. Very true. Well, and hey, I'm going to clarify something really quick. Dale, we do not have a guest today. Is that correct?
It is.
Okay. Well, Steve, thanks for all the updates, and Stelios and Nick as well. It was nice hearing everybody's views, especially for me. It was getting everybody caught up. And I want to welcome all the traders that have now, we've got a lot of traders in our chat room, a lot of people that have jumped in there, took advantage of our new seasonal offer. So welcome to the ForexAnalytix family. It's great. I'm excited to interact with everybody, especially over the next couple of days. And there's a lot of new faces in there, so it's really, really cool. And for me, what I'm going to be watching for probably the remainder of the day is just how the dollar is going to react. I'm cognizant of the fact that the dollar was rallying and going into Asia and then stopped in European trade. And so if we cannot get the dollar higher by the end of this session, I might be thinking dollar swing shorts for the next couple of days ahead of NFP, but we'll have to see how things close. That's what I'm thinking now. Dale, did you have anything else, or Steve, or Stelios, or Nick?
Blake, I think this is perhaps a good opportunity to say a word about our reimbursement program now that the offer is off.
Yeah. Just if you guys are not here in the United States, if you're located anywhere around outside of the United States, we have a reimbursement program. And if you haven't seen it, here I'll take you over here. There's if this reimbursement program will actually it helps subsidize the ForexAnalytix pricing. So you have a reimbursement program here if you're using the correct or one of these brokers, and it's great because this way it helps subsidize the cost of ForexAnalytix. We automatically credit your account based on your trading volume, and in essence, if you trade enough or a certain amount, you can get your ForexAnalytix for free. So make sure you take a look and see if are you associated with any of these brokers, and if you are, how do you get involved with the reimbursement program? And then if you have any questions, you can always look down here or email us brokers@forexanalytix.com and ask. So that's that is something that a lot of traders that again are not in the United States have taken advantage of, and I think it's a wonderful way to get ForexAnalytix for pretty much nothing for some people. So with that being said, Dale, I'm going to pass it back over to you.
Okay, thanks, Blake. So some great ideas to consider with the work the week ahead. Just want to.
If we have any questions, I will gladly look at any charts people want, Dale, before we go.
Okay. Any specific instruments that Steve will cover for you. Will copper be effective if dollar stalls?
Let's have a look at it.
USD1 is a leading pair. Okay.
Okay, let me take the screen and we can have a look at a few things. I mean, just answer questions before we go. Let me see. There we go. The screen. Okay, let's begin with, you said there is a question about copper. Okay, nothing changed since yesterday's look in copper. I think that copper is consolidating, usually after a move lower like the one we've seen. That tells me that copper has at least one leg left lower, which also, you know, gives me confidence, as I said yesterday, about my Aussie USD short, for example. So I think that copper is constructive in the medium term, but I think that before it starts moving higher again, it probably wants to push lower once again, if not from here, from a little bit higher. Okay. How do you get in the chat? I'm a subscriber on the page after login. Yes. Okay, I can show you this. I will happily show you. If you're a subscriber and you're eligible, because I remind you that people that have semi-annual or annual plans, or people that have been more than 6 months with us, are eligible. Once you click here in the settings, you get an extra option here that says go to chat room. Okay, once you click it, the system automatically opens in a separate tab, the chat room, and as you see, everybody's here. We currently have 63 people in here. So this is how you enter the chat room. If you're not sure if you're eligible or whatever else, we have excellent people in customer support. It's, I hope I don't forget anybody. It's Catherine, it's Max, it's Sarah, and you know, those are the three mains. We have a couple of part-time as well. So you know, they will very gladly help you, or you know, assist you, or check your account, or whatever else. They're there for you. To open a ticket or ask any questions to ForexAnalytix, and that goes also to non-subscribers, there is always the bottom right intercom button you can click, and you can immediately, you know, contact customer support. Okay. Let me see. Any thoughts on Euro, Kiwi, and EuroCAD? Yes, definitely we can do that. Let's have a look at both of them. Okay, Euro Kiwi. I think the Euro Kiwi wants to resume to the upside, actually. This is what I'm seeing here. We said like a few days ago that it might move up from there, or it might do another attempt, you know, to go lower, test this level and go higher, but I think it just wants to go higher from here. Okay, so this is what I see, and if that's the case, if this is proven to be the case, I think it's going to push to new highs. So that's what I see with Euro Kiwi. I think it's quite straightforward. Now, on the other hand, with EuroCAD, as I said yesterday, and by the way, I know that nobody asked for that, but I'm going to mention it. EuroCAD is very, very similar to EuroNOK, very, very similar. Both of them broke below their corresponding ascending wedges, gave us some nice follow through. I was short both of them at some point, actually, and you know, it was a good trade, but afterwards they just got stuck in a range, both of them. So both EuroCAD and EuroQ and EuroNOK, I think that they don't present some nice opportunity at the moment. You know what I mean? I see much better setups out there. So as long as they're just in a choppy range, I'm just monitoring these ranges, but you know, I'm not liking it. I'm not willing to do anything. Okay, as you see. So I think that there's no trade here. I mean, no trade that has a nice risk reward, that has a high probability of playing out. So I would suggest you look elsewhere. So patience and sitting tight, like Jesse Livermore says, is the key to making money. Day trading will make you broke. Arif, that is something I 100% agree, because you know, this is the way I like to trade for myself, but I cannot decline or deny the fact that I know people that do day trading and they're very good at it. But I can tell you as a fact that I find it personally a lot easier to just be patient and take the trades that actually give you high confidence, instead of striving every day to go in and out of the market. And since by doing that you need to use more leverage, always being in danger of some kind of a black swan event or some kind of news event, like throwing you out of a position or taking you, to negative, like in zero time, etc., etc., etc. Yes, sir. It's our pleasure. Thank you for your kind words. Hi, everyone. Just wanted to share my pound index weekly. More upside is possible, but it looks like it has unfinished business to the downside, and that we're still in a long-term bottoming process. Thanks for all your good work. Cheers. Thank you, mate. Let me show your chart. Let's see. Yes, it looks likely. But on the other hand, from what I see, you're doing Elliott wave interpretations here. On the other hand, there is absolutely no doubt, as you very well know since you do Elliott waves, that we might end up having a correction that is a lot more complex than an ABC. So, we have absolutely no confidence at the moment that this is the correction and that's the end of the correction. I'm not doubting that this is a very valid count, that this might have been a 1, a 2, a 3, a 4, and a possible 5th. But I have two problems with it. One problem is that although I'm currently long the dollar, it's not easy for me to see a scenario that the dollar becomes much, much stronger. I'm expecting a rebound in the dollar and the correction, but I'm not expecting new highs to be hit. Although, to be fair, Greg does expect that to happen, and Greg is an excellent trader as well, so he might be right in this one and I might be wrong. And I still believe that the market is pricing into too many negative things for the pound. So I'm a little bit skeptical about the pound, although I have to agree that if I had to have a long-term position, I wouldn't choose to be long or short the pound against the dollar. But on the other hand, I do see some very, very nice opportunities coming up in crosses of the pound, like the pound Aussie, the pound Kiwi. Both of them are in the precipice of some major breakouts to the upside. So that's my view, mate. USD Yuan is leading pair. Yes, it's one of the leading pairs, totally. Also, Euro Pound, Luca says, let me see. Luca, if Boris Johnson gets the boot at the Tory party, I see a savage rally in pound from this low 132 area. I agree with you. It's going to be pound positive. Also, Euro Pound here near 0.89 may be of interest. I totally agree with you, and I showed that yesterday. I do believe, and I still remain of the opinion, that the Euro Pound does remain bearish as long at least as we hold the 89.20 level. So I'm still not in the camp that this might be a bottoming pattern or whatever else. I still maintain my short. I'm comfortably in the money, and I'm actually, because I have taken profit on half, as I've said, I'm actually actively looking to add back that 50% and not the opposite, not be long or anything else. So I totally agree with you, Luca.
89.60.
Comments about CAD Swissy? Absolutely. Let's have a look at it. And that's the last question, so we can then call it CAD Swiss. I think this is where I have it. Let's see. Yeah. Okay. The CAD Swiss. Nothing has changed in the CAD Swiss. It has nicely broken out. It's now moving lower. I have absolutely no reason to believe that this is not simply a corrective move. Okay. So whatever, it might happen, because as we've said many times, corrective moves can be something like that, or whatever. Corrective moves you cannot know in advance, like how exactly they're going to evolve, if they're going to be triangles, if they're going to be whatever. But we expected a rebound from there. We got it. We're now correcting lower once again. I have to say that as long as we remain above this, let's call it 0.76 area, I don't think you should be worried at all. It looks good. Okay, Dale, thank you very, very much. By the way, I had promised our friend Oli from the chat room that we're going to talk about something he mentioned to me yesterday, but I'm going to do that tomorrow, that we're going to have more time. It's about trading mentality, etc. So I haven't forgotten if he's still here. I'm going to talk about it tomorrow. Thank you, Dale.
Looking forward to it, Steve, and thank you, everyone. See you tomorrow. Good luck on Turnaround Tuesday. Remember, High Impact Day Friday, NFP. Don't just count your pips, count your blessings, and see everyone tomorrow. Adios.